What's happening, guys, and welcome back to another Sunday Scan. We are here in Arizona for a special project, so we have a different backdrop this week, which is awesome. If you're joining us for the first time, we are Investors Underground, and every single week we do a Sunday Scan where we basically go through everything that's been happening in the market and then, prepare for the week ahead of what are going to be the best potential tickers to watch for different trades. We come up with trade plans and we scan the market and talk about what's weak, what's strong, and just tie everything together that way. So make sure that you like, share, and subscribe to get those videos every single week. Last week, I announced that Traders for a Cause early bird tickets were going on sale. And so the early bird tickets are now out, and so are the main tickets for the event. So we will include a link. There's still some early bird tickets left, and the advantage of doing that is that you get a good discount on the tickets going in. So snag those last couple of early bird tickets while you can before they are gone. And then after that, the regular admission tickets will still be there. So we will include a link in the comment section for that. So make sure that you check that out. And then, definitely check out Traders for a Cause, which will be held in Miami this year, February 2026. So coming up in the next couple of months, but technically into the next year. So we have a lot of great stuff to go over today. We've had a ton of volatility in the market continue. Last week, I feel like was a very pivotal time where you really had like the, bearish kind of action, like the correction action start to speed up. And we had some really good trades in Investors Underground, kind of using the correction principles of like what sectors are falling apart, looking for continuation to the downside. And then towards the end of the week, kind of changing our bias towards bounce trades, because as corrections or as, bear market type of action goes on, it eventually becomes more and more vulnerable to those big bounces. And that's, really like bear market rallies or like correction rallies. And when I say bear market, I don't mean that we're actually going into a bear market or anything like that. It's more just when you have broad-based downward action due to factors in the market, that is what I consider bearish action. And that type of market environment is much different than a lot of other environments where you mostly have like buy the dip and, a lot of money just flowing into equities and everything like that. So we had a couple of pieces of news, especially around some of the Fed members becoming a little bit more hawkish, which means that they're taking a more cautious approach to any further rate cuts. And so what that did is that spiked up bond yields a little bit, and that can have a little bit of pressure on the market. And then we've also had the AI trade kind of unwinding in a lot of ways. So aside from a few names like AMD and, MU and some other ones, you've really had a huge correction in a lot of the AI names. You look at things like CRWV and, some names like MBIS that have really been some of like the market darlings and the go-to names in more the speculative or like the mid-cap space there. They have come in a ton. So we will go over all of that and more in today's scan. And now I'll pull up some charts. But before I do that, I will give the disclaimer that I'm not a financial advisor, and these are not buy or sell recommendations. Everything I'm going to talk about is for educational and informational purposes only. Now let's get into scan for the week. Okay, so the first chart that we're going to go over is SPX or SPY, whatever you want to use. And so this is an interesting concept because you could see there's been a lot of weakness in the actual general market, but the index looks like it's holding up pretty well. There's a couple of reasons for that. The S&P 500 index in general is very reliant on some of the largest tech names, and some things like Apple and Google have been holding up fairly well. And then also financials are a massive part of the SPX or the S&P 500 index. And so until basically Thursday and Friday, banks have been holding up pretty well, and they've actually been very strong. So that is a reason why, even though you've had some volatility, this has been a very muted reaction to a lot of this, market chaos that we've been seeing. But compare that with something like IWM, you can see how much weaker IWM, which is just a small cap index, has really been over the last week or two. We talk about this frequently when rates spike, or when the Fed is talking about not cutting or anything like that. Bond yield spike, rate spike, and then that has a inverse correlation with the small cap index. So as rates go up, as the Fed gets a little bit hawkish, then small caps tend to get hit the hardest. So that's just a correlation that I wanted to touch on. We're not going to spend a lot of time on it this week, but I did want to touch on that. banks. So XLF is a good financial index to use for banking, and it tracks the financial sector. And so you can see this has held up pretty well, but we're starting to see a little bit of action coming in on that Thursday and Friday, which is starting to impact the market. So as long as banks are kind of holding up, I don't think that we're going to see any real market damage, at least from the index side. But if banks start to break under some of these levels and trend down, if there's actually fear in the market, banks are some of the hardest hit things, and they go from looking really strong and really relative strength to really weak very fast, so that you can have some nice trades on those if the market actually gets spooked pretty bad. There's a couple names like Tesla I wanted to quickly review. And so when you have market corrections, or when you have, bearish type of action, a lot of times even the relative strength names, like you can see Tesla has had, a lot of relative strength. It's been, near those highs, and it's been consolidating in that clean channel for a while. What tends to happen during market corrections is that even the relatively strong names fall back to the next kind of trend line. So if you were to look at this as like its own little trend here, that is like when the market's good. And then when the market's correcting, Tesla is kind of falling back to this broader trend line, up here, very loosely, like, just falling back to a more major level as opposed to hanging around towards the top. So we see that in a couple of names like BE. I actually got stopped out on my BE swing as it was doing kind of that same thing. You could see after hanging out in that channel, even though it had relative strength, the market got weak enough and the AI energy names got weak enough that it ended up flushing under these levels. And then I ended up stopping out around that 110 area or so. I wanted to give it a little bit more room. But then, I mentioned in IU that using that around 100 level is a nice area to use if you want to get back in. So even if you stop out on a swing trade, it's not like, once you stop out, you're done with it. It's like, okay, I'm done for this type of, move, this type of action. But if you still think that the name can do well, if the market, looks like it might recover, then you could always just get back in. And that's a lot, psychologically, I think it's a lot better for people to do that as opposed to, just having this super, super wide stop. And then, okay, suddenly it's back to, the 70s or the 60s. It's, far below your average. And that's not what you want. So you want to be able to lock in. And if you get stopped out for a small loss, that's fine. You can look to re-enter if it's looking like it's, bouncing. So it did have a nice bounce on Friday. But that's just a good kind of general concept that even relative strength can fall back to those broader trend lines. So you can see that this is more in line. It's actually breaking a little bit from, this prior trend line. So we'll see if it rejects and if it stays heavy. But if it starts to consolidate and reclaim, then that's just kind of joining the broader trend line again. Main watches for the upcoming week. A big one for me is going to be BABA. So in bearish type of action, even though this is a Chinese name, a lot of times what I'm looking for continuation to the downside is these big moves, these big chart structures that have been consolidating for a while, and now they're starting to break below key levels. And they have a recent catalyst. So there was a recent catalyst with BABA that basically the U.S. or the White House was accusing BABA of helping the Chinese military, with some of their AI applications or things like that to, do nefarious things to the U.S. And so once that came out, that was kind of like the nail in the coffin, kind of slamming BABA down underneath these absolutely key levels. So this will be on watch for continuation to the downside into the upcoming week. And not only BABA, from that perspective, but BABA and Baidu are also very involved with AI in China. And so if you have the AI trade kind of unwinding in a big way in the US, that can spill over into China as well. So BABA and Baidu, you can see very similar kind of structures here. I think if the market stays heavy, if AI stays heavy, and these have a recent negative catalyst, then they are a good contender for some continued downside. So by looking at, zooming into more of like the intraday, you can see, what are some good areas to risk against, drawing some lines around here, and then using that as your backstop can be an effective way to play some of these big continuation trades to the downside. Google, it's been more relative strength, but you could see that same concept that we talked about with Tesla and with BE, even relative strength that has been, flagging up here, it can fall back down to like a more general trend line, which you can still see it's holding up very well, but that's just falling to the overall trend as opposed to this micro trend up here. So that's a good one to keep in mind. And then also Berkshire Hathaway also revealed that they have a new position that's $4 or $5 billion, I believe, into Google. And so after hours, that was spiking, which you don't see here. But so that could start to reclaim and go back to that micro trend. But we did have a nice, flush down to that overall demand level in that trend line. So that's one to keep on watch for relative strength into the week ahead. NVIDIA has earnings this upcoming week that will be absolutely huge for the market. And, this has been one of the best AI names that's been held up, and a lot of it's been priced into it. So if you look at the earnings and the CapEx for Google and Meta and Microsoft and all these places, Amazon, they're all spending money on data centers, on AI, and that all filters into NVIDIA. So we know that their earnings are going to most likely be very good. Their margins will probably be pretty good, and their revenue will probably be pretty good. But if you've had the recent market action of even good news gets rejected and you have a big, rejection on that earnings release, then, the AI trade and the market could be in real trouble. Now, it's possible that we kind of, finish the correction leading into NVIDIA, and then maybe that pulls us back up. But either way, that's just going to be a key thing to keep on watch. So no real game plan or trade plan for NVIDIA, but we need to see what those earnings are and the earnings reaction after that. HIMS was a big one for me over the last couple of weeks. I was watching this, big range consolidation and then breaking underneath that with the recent catalyst. So you had things like LLY and NVO have some weight loss deals with the US and basically lowering the prices. And so that really hurts like the generic, platforms and the things that are trying to undercut the pricing there. So that was a big negative one. So this was a slower moving name, but it started to speed up. I traded this with puts. I mostly, caught some of this move around here from the mid to low 40s down to like the, mid to high 30s. I didn't catch that last leg. I stopped, or I finished my puts trade around, somewhere around here. But it was a nice way to capitalize on that broader thesis there. Palantir, you can see the same thing. It has been a relative strength name, but very, very high valuations and kind of, losing those recent trends and falling back to like more of a broad, trend. So this area around here, this, 175 or somewhere in the mid 70s, that could be a big level. If it starts to reject that and then, fall under here, then that can be a negative sign and that could have some continued downside in this market, in my opinion. SMR, so again, the AI energy names really, really unwinding. So you can see similarities here of like HIMS, big channel of an in-play theme and then some negative news and then a big unwind going back to, some more substantial levels. I think you're having like where this is right now with the AI power names, you're starting to see that with the crypto names now, even the ones that have been relatively strong like Cypher and some other ones, now they're all breaking down and crypto's been super weak over the last week or two, now down to, 95K or whatever it is at the moment. So these are breaking below big levels, and you probably have some rejects, some bounces along the way, but they are mean reverting back to these other levels down here. And you can see the same thing happening with IREN. This is not a good look for a chart, especially with some market correction or some bearish action overall. WULF, exactly the same thing, breaking some big structures here. And I know Dawson had this on watch for some continued downside as well. So some good names to keep on watch if crypto stays weak. And on the topic of crypto, you've had MSTR really unwind a huge amount, and that is a big risk factor to the crypto space because there's such a large buyer on the way up that if times get turbulent, they sometimes have to pull back their buying, and then the stock can actually weigh on the crypto itself if there's fears that they might have to sell some at some point. We're a long ways off from that, but it's just something that has been circulating in the market narrative. So Coin, another similar situation where if you were to look at this, it's breaking under some pretty key levels. So you could have a bit of a change in the crypto sector as a whole, and maybe it's just kind of breaking out of these recent levels to more long-term trends like we talked about, but this is getting a little bit ugly down here. So a lot of times what you'll see with this bearish action is you'll have it break below these levels, then swipe up and retest it. So if you were to draw a line around here, that's a good way to kind of keep in mind, okay, this is breaking below, now it's retesting, and sometimes that's a good area to enter in for downside, whether you're short or whether you're using puts. MU, again, same kind of concepts that we've talked about with the relative strength names, but still me reverting back to those bigger trend lines here. So the memory sector in the AI trade is one of the few areas that's held up very well because things like Samsung has been raising prices. And so it's like a pocket where it's still growing. It's still, everything's going well in the memory space because there's a lot of constraints there. So MU was a good example of relative strength, kind of mean reverting. And then this SNDK, someone in the comments last week asked if I could go through a trade that I had and kind of like the entries, the exits, go through. So I'll use SNDK as an example for that. So basically, I had a good mean reversion trade on this day, on Thursday, for SNDK, but it's just kind of using some of the concepts that we've been talking about. So you can see SNDK has been, it's in the memory sector, so it's had a big tailwind for it, and it's been, in this overall trend line with very normalized behavior. So even though it's up a ton, it hasn't been like going crazy compared to its past trend. It's more just, kind of trending here, and then you could see I start to get interested as it started to speed up and break away from that trend. So this is normalized action here. This is speeding up. So if you were to draw trend lines on the top here and on the bottom here, you could see that's pretty consistent in there. This is breaking out of that. Once it breaks out of that and starts to speed up, especially for multiple days in a row, you had a big move up here, then 1, 2, 3 big days there. That's when I get really interested, especially if it's near a Thursday or a Friday, because the options, the call options, there wasn't a ton on it, but sometimes those can start to decay and that can weigh on it. But sometimes more importantly, the options just get cheaper. And so people can start to pile into puts around those times and actually want to play them, as opposed to just sitting in these expensive options that aren't really doing anything. So on Thursday, that was really when it was on my radar, and it started to kind of gap down in the morning. So I'm going to go into a more zoomed in time frame here, and then we can explore kind of how that trade played out. So this was this was the day that I'm talking about. So it basically had a big gap down to start the day. Back to kind of like key levels. And so what I usually like to do is a name is kind of gapping down, a lot of times you'll have like a couple of different strategies around this. One is you have like that morning flush. And if you have a name that a lot of people have been wanting to short, then a lot of times it will, flush and then squeeze them out, or at least, retest some levels. So what I did is I put on a starter position with puts, because that's how I was playing this name. I basically put a starter position on here because I knew that it was weak. I knew that it was ripe for a mean reversion, but I didn't quite have all the information that I needed to know that it was actually the unwind day. So basically I put on a starter with puts around here, and I got the 260 puts, I think I started with the 260 puts, but then as we got confirmation, it swiped back up and then rejected some of those levels. That's when I started to add, as it started to crack underneath that. So I started to add puts. I added the 257.5s, the 255s, and just basically around the chain, I'm looking for puts that are slightly out of the money, that are recently priced if I think a big move is coming. And what I want to happen is for those puts that are slightly out of the money. So if the strike price is at 260 or 265, I'm getting things that are slightly below that I think the price is going to fall through, and those puts will go from being out of the money to being in the money, and then that can have a big leverage effect. And so you can get puts that are $5, $6, $7, and then they can go to $10, $15, $20 if those go from out of the money to in the money. So that's exactly what I did. And then I started to cash out a little bit of the puts around here, because there's usually two phases to mean reversion. One is the initial kind of leg lower, and then a lot of times during the middle of the day they start to have some consolidation, and then later in the day they have that next leg. So for me, it was big to lock into some of this consolidation, because part of what the consolidation is doing is it's burning put premium, and some of the options are consolidating. So I don't want to be a part of holding a bunch of puts as that IV, the implied volatility and the pricing of the puts kind of consolidates and goes down. I'd rather take that first leg and then look for that, bouncy ball setup where basically as a first leg down, it starts to make lower highs against a support level, and then has that crack later on in the day and then re-enter there. So that is the way that I actually traded, with entries and exits, SNDK. And again, this was a good mean reversion trade. This is one of my favorite types of trades, especially for put options. And then, but it was an intraday trade. I'm not swinging these positions. I'm not holding anything over, because even though SNDK did a nice mean reversion, it was really just back to that overall trend line. It was not a full trend break. So just like we talked about with Tesla and some other things, when things have, an overextension mean reversion, they tend to fall back to that area as opposed to a full trend change. So this is still in play, but if we start to see it reject under some of these levels, that could be a true trend change. So that's an example of a trade that I took, and it was one of my it was probably my best trade of the week or so, and that carried the bulk of the P&L for that. A couple other names I'll go through for main watches. NBIS. So I talked about how I want to see the reaction on earnings. I thought it could have a potentially good reaction because they've had so much deal flow and multi-billion-dollar contracts, but you know what? Full rejection after those earnings. It popped a little bit on it initially and then sold off. So we've been seeing a lot of that earnings rejections, even on good earnings. And so that is a huge tell in the market that every pop is being used as a liquidation event for people who have been in the stock for a while to cash out into. So you can see this is breaking under major levels now, and you can see those swipes back. It's trying to test it and it rejects off of that. So this is a very bearish formation now. And again, it's come down a long way. So, you have to keep that in mind, that it's vulnerable to these swipes and these retests, but that's not a good look for a chart, especially in a sector that is unwinding. And you can see another example of that is CoreWeave, same exact thing. That's breaking under key levels and it's rejecting. And so I would assume that if the market stays heavy, these are going to be some of the cleanest trending names back down there. So the last one, or second to last one I'll talk about is this had a ticker change, but CYPH was a really good liquidity trap. Had a big move up, some consolidation, and then it came back in. So I did have some good trades on this one. Big move up, tons of volume. I had like 700 million volume or something like that, something ridiculous. And that's what you want to see. So after that first day, it kind of comes in a little bit, consolidates, and you can see how much the volume dries off. And then as it got into Friday, the volume was still low, but it was starting to grind back up, and then the volume came back in, and then that caused the squeeze out, and it's like somewhat of a symmetrical leg of that first move there. So that was a really nice liquidity trap that we had traded this week. And then the last thing that I'll go over is Rocket Lab. So again, another one of these kind of speculative positions that has been breaking down. That's potentially getting into trend change area. And as you have it rejecting around these levels, you could have some continued downside. So this will be on watch for puts into the next week. So those are the main watches that I really want to go over for this week. I hope that it was helpful for you. And again, make sure that you're liking, subscribing, and sharing this with a trader friend to get them ready for the week. And then final reminder that the Traders for a Cause early bird tickets are still available. It's a discounted rate to the big annual concert or the conference. So basically make sure that you check out those while they're still there. And then after those are gone, you still have all the regular participation tickets for Traders for a Cause. So we will link that in the bio and in the comments section. Make sure that you click that. And I hope that everyone has a great week ahead.